stock of the day is GrainCorp. It's out with an update and its preliminary results. And it's warned that business volumes are declining. So the company expects to report underlying earnings of $164 million, down significantly from $383 million in the previous corresponding period. Net profit after tax expected to be $57 million versus $200 million a year ago. Operating conditions and the outlook leading into the second half of FY24, it also says, have softened. So underlying earnings has been adjusted down to a range of $250 to $280 million. Net profit expectations revised down to between $60 and $80 million. So the CEO, Robert Spurway, saying that, that decline in overall volumes handled across the East Coast and lower end-to-end supply chain and crust margins have come through relative to the first half of 2023. Its share price is down by 2.5% to $8.19 just past noon here in Sydney. Oh boy. Guys, Mathan, I'll start with you. That's quite a downgrade coming through.
Yeah, but I think the market to a certain extent expected it. Agri sector, when it's down 2%, that's like day-to-day trading. It's a rounding error. Yeah, if it's not down by 10% or 20%, then you're happy. I think GrainCorp, to a certain extent, they set a low expectations at the AGM, as they always do, and they tend to beat that. So in time, I think they'll do better. But we did see grain prices. There's a fair amount of supply coming out of the US. They've had a great couple of years. So there is that holding back the prices. So in context, I think it's okay. 2% down, in a bad result. It's great. It's actually positive for me, agri sector. So in that context, we're not in GrainCorp. We actually prefer Elders, and I know Pepe will like it. But I know he looks at this sector. We used to work together before, and he was looking at this sector, so I'm not shocked by the fact that he will know enough about it. So look, I think it's fine. If you're there, I'll be holding it. But I prefer Elders on a risk-return basis. Actually, I'm also looking at rural funds. I think that's a pretty decent safe play. It's a good yield, and I think it's undervalued for what it is. And I think the overall agri sector continues to do well. The market is underestimating inflation. It has been for years. And food is one of the inflation plays. So I suspect over time, and erratic weather is happening around the world. Supply chains are hard. Geopolitics is another thing. So all of these things, I think, for food is good. So I think agri sector, just be aware you have to live with high volatility.
Yeah.
So these things get...
Interesting to note that RBC Capital says that it was surprised by this miss, saying that because GrainCorp has historically taken a very, constructive approach to its guidance, that it was caught off guard. Also because it had been saying that, the recent rains and the market commentary has been all talking up, near-term positivity for some of these companies. And what did you make of this update coming through? Were you caught off guard?
Well, no, I wasn't. But when I saw, because we had the Elders trading update 2 weeks ago, so we had a peer come out and say, you guys are all looking, and girls are looking forward, which is great, but we're not through FY24 yet, and FY24 is actually challenging. So we had someone give us a warning saying, although the future's looking bright because of rainfall and livestock prices, etc., that's FY25, particularly first half 24, was challenging. Trading update from Elders 2 weeks ago. So when I saw the headlines from GrainCorp versus consensus, I thought, why was consensus so different when we had a trading update from a peer 2 weeks ago? And the share price barely moved, as Mathan said, 2% for an ag stock is nothing. So the fund managers understood it. The real consensus that we don't get to see, the fund managers, the people who write the checks, they kind of expected this was coming and have shrugged it off, and they shrugged it off because FY25 still looks okay. It was a miss versus consensus versus their guidance, but given the share price reaction, people probably didn't believe it or were waiting to see. So normally the market focuses too shorter term. This is one rare occasion where the market's saying, yeah, we know FY24 has been volatile, cattle prices, rainfall, but we've had already in April, at least in New South Wales, in the first 6 days, almost a month's worth of average rainfall. Not quite. People think we've had 100 millimetres of rain versus 125 that we normally get. So this winter is shaping up to be pretty decent, which will impact both these companies FY25. So for me, perhaps consensus stuck to guidance too closely. Should have taken it with a little bit more cynicism. Pays a good dividend yield. If they don't cut it, 6% dividend yield it's a little bit cheap. There'll be some downgrades overnight. I'm going to call it a hold because analysts should have known this. The share price suggests that many people did call it a hold.
It's a hold for GrainCorp for both of my guests.